Mike Sullivan. I'm a former IRS agent and teaching instructor. Welcome to my YouTube station. My YouTubes are fast. I get in and out to tell you. Just so you know a little about me, I worked at IRS for 10 years. I was a teaching instructor in the Southeast region for the IRS. I was a revenue officer, did all sorts of stuff, as you can imagine. I worked 10 years at IRS, and I've been in private practice for 41 years. Today I want to do something kind of different because I've been getting a lot of calls about this. A lot of people are getting these IRS notices. IRS sends a form 6199 or a letter 66222 advising that IRS is coming out to audit you for due diligence compliance. And this is a really wake-up call when you go ahead and you get these. And because basically IRS is coming into your business to audit the tax returns, in fact, that you've prepared. So if you're hearing me, it's not that I need more work, but you should get somebody to represent you. And I will explain the reasons. IRS just doesn't randomly come out to do this. They don't do that. IRS knows everything that you do because when you file your EFIN, your PTIN, all that stuff, IRS keeps track of everything, and they've developed patterns. They've got patterns on everyone who prepares tax returns. They know these, so they are targeting you, your business, for a pattern that's happening that they're not happy with. And I want to give you some of my notes I've taken with my last our last client on a prepare audit. So IRS is going to ask for a bunch of documents that you may or may not have. Like I said, they're looking for patterns. Many times these patterns are you taking household income because they're looking for money and credits that you've given to people that they don't deserve. So they look at the household, who's had a household, the EIC credit. They're looking for losses. They're looking for your accuracy, how you have prepared those returns. So what happens first, they come out and interview you. They're looking to see if you're competent to prepare tax returns. That's really big. That's what this interview is all about. You know why? Because a lot of people have cropped up. They popped up out of the blue, and now they have sometimes a barber shop, a beauty salon, and they're offering, hey, guess what? We can prepare tax returns as well. And that really becomes, there's a lot of these. The IRS could hire thousands more auditors like this, and they can never keep up with everything that's going on. Keep in mind, you may have really nice records, you may have perfect records, but there's patterns that are happening that they're seeing that they're not happy with. Usually, like I said, money is going out and they're just saying it shouldn't be there. Your statistical probability of you giving these credits away and taking certain deductions, it's not making sense to them. So they're looking for deliberate errors in entries. They look for that. They're coming in, they're basically going to audit you. They're auditing the records. And here's what specifically they're looking at: the child tax credits. Like I said, the EIC, the American Credit Act, you know about that, head of household. And remember, every preparer is different. Everyone takes a tax return and they look at it differently, but there is a pattern, like I said, that that does not make sense. IRS is making sure you have properly documented everything through your due diligence, and they're making sure you're following IRS Circular 230. So what can happen? Well, a number of things can happen. You can lose your license. They can go ahead and refer your information to the Department of Justice for fraud. IRS can shut you down. They'll notify every client that you have. Not only can this happen, but they may audit the returns of people who you've given these credits to because money's been given away for free. So should you go ahead and hire someone? It's up to you. Here's the problem for most people. The basic retainers for these can run anywhere from $5,000 to $10,000. You should know that ahead of time. If you only prepare 200 returns, you're thinking, what should I do? But here's what you have to remember. Every error that you make is $600. So they could look at these. You could have given these credits away, give losses. It's easy for a tax preparer to have $3,600 in penalties on one taxpayer. So be careful. You know what I'm saying. Make sure you get represented if you think you need to. Some people may say, "Oh, I don't need it. I've got decent records." Good for you. We're only here to go ahead. We kind of evaluate what we have. Ronnie and Herb on our team have done this work for IRS, so they know everything that's going to happen. Anyway, that's all I got for you today. Contact me. I always answer my own phone, by the way. Give me a subscription and keep up with all the latest happenings with IRS. Thank you.